Welcome to the weekly market wrap-up. I'm Hannah Bernard. To say the Toronto Stock Exchange had an up and down week would be a bit of an understatement. The TSX swung wildly this week with two 300-point plunges that left investors battered and bruised. What's going on with Canadian markets? Let's find out. We're going to start today with Canadian markets, where the damage was really done. The Toronto Stock Exchange suffered a 329-point plunge on Monday, or 2.3%, which was the worst one-day sell-off since mid-2011. On Tuesday, the market managed to rally, posting a 50-point gain, but then was mauled a second time on Wednesday with another 300-point beating, dropping 342 points, which was a loss of 2.4% in value. Investors did manage to pick themselves up off the mat on Thursday, posting a 52-point gain to close at 13,905. While Thursday's performance is hopeful, the reality is that the Toronto Stock Exchange has officially hit correction territory. A drop of 10% or more from recent highs is considered a correction, and on Wednesday, the TSX total drop since posting midsummer highs is 12%. Thursday's gain puts only a little dent in the loss. For now, the TSX is in a correction. The TSX Venture Exchange had the same brutal up and down week, losing 3.2% in value on Monday and 2.5% in value on Wednesday. Thursday saw a little bit of a boost with a 4.41 uptick to close at 663.40. Now let's turn to U.S. markets. The Dow also posted a healthy 63-point gain Thursday to close at 17,596. The S&P 500 also had a choppy week, gaining some ground Thursday, up 9 points to 2,035. And finally, the Nasdaq had a solid day Thursday, notching a 24-point gain to close at 4,708. So what is going on with the TSX? Well, no surprise here. It is the plunge of oil prices and the toll that it is taking on energy stocks. Premier Canadian energy companies such as Suncor, Canadian Natural Resources, and TransCanada have all taken a major hit, with Suncor announcing today that it will dial back spending by 15% for at least half of the first part of 2015. Since this summer, oil prices have fallen about 40%. The sharp decline was sparked by lower demand prospects and an overabundance of crude oil, thanks in large part to surging shale production in the U.S. and a refusal by OPEC to cut production. The price of crude oil traded on the New York Mercantile Exchange fell 0.87 cents on Thursday to close at $59.08. That is a $7.66 drop in the price per barrel in just 1 week. So how far could oil prices fall? The Bank of America predicted this week a floor of $50 a barrel, while other analysts said it could go as low as $40 before a turnaround. And now to winners and losers in our picks for the week. The winner for this week is Lululemon Athletica, ticker symbol LULU. Lululemon shares shot up over 9% on Thursday after delivering better than expected earnings results for the third quarter, which were driven by an increased focus on more store openings and finding the right product mix. Shares gained $4.26, which represents a bit of a turnaround for the battered company. The loser for this week is Conn's Inc., ticker symbol CONN. Shares in the specialty retailer dropped 12.5% on Wednesday, following disappointing earnings results released on Tuesday. Overall, Conn's stock plunged 40% this week due to a much higher than expected bad debt provision that was about 2 times what was expected. Well, those are our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. That's enough about this week. Now let's turn to Baystreet.ca's look at the week ahead and a snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Tuesday is Hyco Corporation with an EPS forecast of 44 cents, identical to the prior year quarter. This week, Hyco reported that 2 of its subsidiaries supplied electronic components for NASA's Orion program. Next up on Wednesday is FedEx Corp with an EPS forecast of $2.18 compared to $1.57 in the prior year quarter. Finally, on Thursday is Nike Inc. with an EPS forecast of 69 cents compared to 59 cents in the prior year quarter. And now our 3 Canadian stocks to watch next week. First up on Monday is Cortex Business Solutions Inc. with an EPS forecast of break even compared to a loss of a penny in the prior year quarter. Next up on Tuesday is BSM Technologies Inc. with an EPS forecast of break even, identical to the prior year quarter. Finally, on Friday is BlackBerry Limited with an EPS forecast for a loss of 4 cents compared to a loss of 67 cents in the prior year quarter. This week, BlackBerry announced it's producing the first secure clinical genome browser, which gives doctors unprecedented access to patients' genetic data on the BlackBerry Passport smartphone. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Val Network News and Baystreet.ca, I'm Hannah Bernard.